Price of oil is soaring. It's up 19% since the lows of Friday, 22% since the beginning of February, and 43% higher since the beginning of the year. Is it going to continue to go higher with the war going on between Russia and Ukraine? Or are we due for some kind of pullback that's going to alleviate the pressure that we're seeing in the oil markets right now? We're going to get to all of that here, and we're going to go through the charts, and I'm going to explain to you my opinion and my outlook for the price of oil and what you can expect to see in the days, weeks, and months ahead. First, make sure you pound that like button and subscribe to this channel so you can be notified of all future videos. And hit that join button down below so you can get the best stock market research delivered to you each and every day. Now, let's look at oil here because it's a fascinating chart. And right now we're hitting over $107 a barrel for crude futures. But this was a big breakout. If you take away the Ukraine-Russian war, you take that all away, this was a breakout that was brewing going all the way back to 2015. So zooming out and looking at crude futures, you have a massive head and shoulders pattern that has formed during this time. And it finally broke out at the end of January. And that's where you're seeing that explosion in not only price, but also volume down here as well. Some of the best volume has been over the past few weeks. And so you break out of the inverse head and shoulders pattern. And for those not familiar with an inverse shoulders pattern, it's a huge basing pattern. This is where you have your left shoulder right here, this nice little loop. Then you have a bigger dip lower. That's your head. And then you have a rally back up to resistance here. And that is your right shoulder. A lot of times your right shoulder is not going to be as well developed as the left shoulder. And that's the case here with this inverse head and shoulders pattern. But is it just straight up from here? No. There's a lot of resistance that looms very large for crude that could be tested in the next day or two. Going all the way back to January of 2011, you have a big resistance level that's very close to getting tested here. So you're looking at about $110 where resistance starts to kick in. What could happen here is that you could see that resistance get tested and it pull back to the inverse head and shoulders pattern. From there, it's anybody's guess what happens. Does it continue to pull back because there's some headline risk that's kicked in and knocked down the price of crude futures? Or is it simply a pullback to the breakout level that will lead to new rally highs? Now, if it blows right past this 110 level, what is the next stop? There's really not much resistance. You go back to 2008 where the all-time highs were formed, then you have a legitimate chance of $147 being tested. And after that, it's clear sailing with no additional resistance. There's actually some options being taken out for $200 price of oil. I don't know if it's necessarily going to get that high, but I can see a scenario where we do break through that 110 level and make a push back up to 147. Now, there's a lot of headline risk too that's involved in crude. There's four major possibilities that can impact to the negative the price of crude. First, interest rate hikes. When you're raising interest rates, you're reducing disposable income in the economy because more money is having to be serviced on debt. People have less disposable income. When they have less disposable income, they're traveling less, they're spending less. That means the price of oil is likely to come down because the demand is not there for it, which also leads to a decline in economic growth. Perfect case in point, 2008, where we peaked out at 147. Once the Great Recession started to kick in full gear, it dropped all the way from 147 down to $34 a barrel. And it wasn't until the Great Recession ended that you actually started seeing the price of oil tick back up. There's also some very short-term catalysts too that could affect the price of oil. One, if there's a ceasefire in Russia and Ukraine, you could have favorable terms that reduces the price of oil. Secondly, there could be a change in the output. Maybe Saudi Arabia increases their output. If they do that, that will naturally increase the supply, lowering the price. So there's definitely headline risk there. You want to make sure that you're not being too much into on the FOMO side of oil. I think the big moves are already underway. If you get in before there's a pullback or at least some consolidation, you're not getting into a scenario where you're able to manage the risk reward in a favorable way. So at this point, I think it's best to let it pull back some, test that 110 level. And if it can't break through it, wait for that pullback to get long on it. If there's some big news catalysts that come out that cause a pullback in price, don't try to catch the falling knife. Let it fall back, settle, and then start the bounce before you consider a long position. So with that said, make sure that you've liked this video and subscribed to it. Click the join button down below so you can get all of my stock market research each and every day. Thank you guys. Fill up your tanks and God bless.